Welcome, everyone, to the Directed IRA Podcast with Mark Kohler and Matt Sorensen, and our special guest. Sitting there with Mark. Darren's in the studio. This is exciting. You've got 3 lawyers you're listening to on a podcast right now. I don't know why you're listening to a podcast with 3 lawyers, but here you are.
Well, let me tell them the topic, and that may explain everything. Okay. First, you've seen the title. We're talking about mining crypto inside your IRA, which you might think, oh, I do XYZ, I'm done. Ooh, no. It's a fairly complicated topic, and the tax ramifications, of course, are what we're really focused on today. We're not going to tell you how to set up your rig or which board to use and all those little technical things. I'm personally mining inside my IRA, and I retain the information my IT guy tells me for about 4 hours, and then I flush it. I'm making money. I'm saving taxes. All right. So we brought in another specialist here. The reason why Darren's here is Darren's an engineer by trade, which makes him technical, anal-ish.
Nerd.
A nerd.
Yeah.
So between a CPA, engineer, and Matt is the lawyer, I think we've got the techie side covered, at least from the transactional side. So.
Yeah, and we're, of course, all lawyers here, and we also work in the IRA space daily. All of us, Mark and I have been doing it since 2005, 6, and Darren's been in our firm now for a while and has helped hundreds of clients who have wanted to mine crypto with an IRA. Now, we help people buy and sell crypto in an IRA so much simpler, okay? Yeah. Very simple comparative to the mining. But for those of you that love the mining, we want to break it down, let you know the details on it and some of the some of the wrong information out there right now.
Yeah, and I just wanted to say that here, this is a fairly volatile topic, or I should say debated topic, and frankly, we don't know why. We put the truth in the title because we're seeing a lot of, and some of them are fairly reputable companies, which scares us. They're not tax experts or tax lawyers, but they're telling people what they want to hear. And they're hearing that I can mine inside my IRA with no tax consequence whatsoever. Well, mining is different than buying and holding. And there is a tax consequence which we can plan around, and we're going to explain how. So I want to reiterate this. Don't get mad and in the subject line go, these guys don't know what mining's about. We're not teaching you how to mine. We're teaching you how to mine and save taxes, which is very different. And you want to meld your tech IT people with your tax people and not just take a blog article you like to believe and hear and think you're done. Because you may go prep your taxes next year and you get your world rocked and you're going to be pissed at someone and they're going to go, did you see that part at the bottom of my blog where I said I'm not an accounting professional, go talk to your CPA? Yeah, that's my way out. But you don't read that part. You read the part where I don't pay taxes and then you finish reading. Wrong move. So
yeah. So let me just hit rather than bury the lead here, let me just say this on the front end, and we're going to put a lot of detail around it, is if you're using an IRA to mine crypto, you will have some type of tax. There's no way around it. Even if you're using a Roth IRA that can come out tax-free, you're going to hit some type of tax by mining crypto on an IRA.
Now, we're going to explain why. Let's ask Darren here. Let's let him chat. What is this tax that we don't want to pay? And maybe we'll both do some examples or metaphors, but explain this tax that people don't see coming.
Yeah, absolutely. So inside of your retirement account, there's really going to be, the big one we're talking about right now is going to be UBIT. So that stands for Unrelated Business Income Tax. And essentially UBIT is going to apply to any kind of investment where you are generating ordinary income. And so that's the big thing with cryptocurrency, is trying to figure out exactly what you're doing when you're investing in crypto. So if you're doing mining and staking and these services where you're essentially providing computing services to help to maintain the ledger and create and validate new blocks, you are going to be subject to UBIT because it's an ordinary income type of activity.
Okay. Matt,
yeah, and that's different from like buying and selling crypto, because the IRS has came out and said crypto, when you buy it, it's a capital asset. So when you sell it, you get a capital gain. And in the IRA world, we all know capital gains, you don't pay tax in your IRA. That's what I get when I sell Facebook stock or any asset, real estate in my IRA. Same thing for crypto, selling an asset, capital gain. But the mining is different. And a lot of people have tried to think they're the same thing. No, buying and selling crypto, different from mining. The income that you make is different.
Okay, example. Let's say I want to go buy a restaurant. Now there's a restaurant and there's a building the restaurant operates within. So as a investor or a entrepreneur, I have a choice. I could buy the building that the restaurant's in, hold it 2 years, 10 years, 20 years, whatever I want to do, fix it up a little, change tenants, whatever. I own a capital asset. When I sell the building, whether it's in my IRA or not, capital gain. If it's in a Roth IRA, I'll never pay tax ever again. But I wasn't operating, I was investing. And so that's the first option when I look at that restaurant. But if I go in and buy the restaurant that's operating within the building, that's not the same thing. That's an ongoing business. That's a service that's being provided. Now you may say, well, I'm not going to serve tables. I'm not going to be the host or hostess. I'm not going to be the cook. So it's going to be passive. Well, it's passive in the sense you don't have to work there every night. But in the eyes of the IRS, it's still ordinary because it's an ordinary operating freaking business. And so you're going to have a tax on the operations of the restaurant versus buying the building the restaurant is within. In summary, there's some companies out there that are saying, well, because you're not doing the mining, we're doing it for you. You don't have UBIT tax or ordinary income. It's all passive. Wrong. In my restaurant, I hired a hostess, a cook, and a maitre d' and a server and whatever, but I still have ordinary income. That's the concern.
Exactly. Same thing like my IRA buys a bus and I charge people to ride the bus and I pay someone to drive the bus. My IRA pays someone else to maintain the bus. But that bus goes out there charging people and getting a service for that piece of equipment, that this personal property going around. Like my IRA gets income for that. That's UBIT. That's business income. And so when the IRS created retirement accounts, they said, we want your IRA to get investment income. And they told us what that is. Rental income on real estate, dividend income from a C Corp, interest income on a loan, capital gain when you sell an asset. Does mining, crypto mining is not falling into any things of what's investment income. So by default, it unfortunately hits over to the UBIT side and it's business income. Now I want to say one thing. I want to be wrong on this issue. I please, if someone could prove me wrong, I would be delighted. Okay?
But some guy that's
I
out
hate
there,
that I'm right.
yeah, but some guy out there that's selling you mining equipment that just, you forward us a blog article, which we get, they go, well, this guy over here says it's not ordinary income. Is he going to sign the tax return? Is he an accountant? Is he a lawyer? Is he going to stand behind that? No, he's selling you mining equipment and services, telling you what you want to hear. Now, if you want to use that service for mining services and mining equipment, do it. But then you confirm with us or whoever is going to actually stand behind your tax return. And if you don't have someone standing behind it for you, it's on you.
Well, I think one of the big problems with all of this is that people come out there and they use the same term for different things. You know, they don't understand the technology. They don't really know what's going on behind the scenes. So just one example with staking, traditionally, you're staking on a node to actually maintain the ledger. But then some other people come out and they're like, well, I'm staking on BlockFi. Well, okay, if you're staking on BlockFi or doing, providing liquidity on Uniswap, that's not the same thing. It's not really staking. But since they don't understand it, they use the same term and it gets much.
That can be more lending or interest income in certain ways, and there's like, if I'm putting up crypto, there's ways you could possibly loan it and get interest. There's lots of companies doing that. That's another variation of that. So you just have to be careful when you're using an IRA because there's these little tax avenues your income's going to fall down into. And knowing when UBIT applies and doesn't, you really have got to engage a professional tax person.
Now,
don't rely on a blog article or a Twitter
tweet. Now, and now on this note, we have some solutions. Let me tell you the brutal part. UBIT is real quick on its scale, close to 50%. I know that's with state potentially, but federal.
Yeah, 37 federal. Yeah, 37 federal, and some states have a pickup on it.
Yeah, so you're going to be at least at 40% in UBIT tax on any profits you make mining. And I know you guys don't want to hear that. I don't want to hear that. I'm mining in my Roth IRA as well. So we've got a solution to help cut that in half so we can really minimize the UBIT. But we've got to be thinking, I've got to talk and engage my accountant on what I'm doing. Now, on that note too, another resource, this is why we wanted Darren on our podcast today. He's one of our associate attorneys here at the firm, so smart. He's available, cheaper per hour than Matt and I, who are the senior partners in the firm. We're busy out teaching and educating, still doing appointments, but we're swamped. So when you call, if you say, I want someone that understands staking, DeFi, mining, I want someone that understands crypto on Roths and 401ks and is a tax lawyer that will stand behind it. Oh, he's right here. Call and make an appointment. That's great. Yeah. You know, freaking A, get on it. So, and we're going to also show you some steps with the whiteboard. It's here off to the side, so we're going there. Matt, what do you want to talk about next? Okay, so we've said the problem. We've said what the rate is. We've got some solutions and support. What do we do
Let's
next?
just say how we like to do it, you know, and I think we can talk about it individually first. Some people I think a lot of people that mine crypto with their IRA have maybe done it personally first. And they're like, I can do this in my IRA. That'd be pretty cool. I can get more, you know, I can get more computing power. I've got some money in my IRA that I can buy more, so I can generate more income from it than I might be able to individually. So maybe we'll talk about it individually and then for a minute, and then let's contrast that and how you do it with the IRA.
Okay, and I'll throw this out, everybody. This is a simulcast. So we are going to go to the whiteboard and show some slides. I've had a lot of people go, hey, when you're doing slides, I love to go watch the podcast on YouTube. So there'll be a link down below in the podcast, whether it's on Stitcher or iTunes, wherever you listen to your podcast, and you can jump over to YouTube and watch the visual of this same podcast. But I like what Matt said. Let's go through it verbally. For some of you, you're like, I'm driving. I don't have time to freaking do that. I don't want to be watching YouTube while I'm on the freeway. So let's go through. I like just that individual mining example. So I'll just turn to Darren. Well, you know what's funny? When we did our IRA summit, which everybody is coming up in Phoenix in about a month and a half, we're going to be down in Phoenix for a day and a half doing all sorts of training with different tracks on self-directing IRAs, Roths, 401ks, covered Ls, HSAs. The group is going to be phenomenal, but this is our 7th year, I think, doing it. The last time we did our summit, Darren was sitting over here and we go, why don't you set up a mining rig? And he's like, I've got a pretty good graphics card on my laptop. Within 10 minutes, he was mining on his personal laptop. So people, I think you can get your head around this, that mining individually isn't that hard if you've got the computer that can handle it. So tell us how you do it generally. Just real quick as an individual, then we'll take that same parallel and put it into an IRA.
Yeah, so as an individual, you need to have some kind of a computer. So whether it's CPU, most people are going to go with a graphics card because you're going to have some better processing power there. And so as long as you have a decent rig or computer set up.
You can go buy one.
Right.
With some of these companies, yeah.
Right, absolutely. And in your rig, you've got a motherboard with 12 graphics card slots, and so you can have multiple cards on there.
Yep.
That's not usually what you're going to do with your typical computer, but what we did is we used NiceHash, which is one of those options out there for
Let's repeat that, NiceHash. That's just an option. It's a service provider like Coinbase, even Venmo now, will let you buy crypto.
Right.
NiceHash helps you mine crypto. They take your rig and they kind of...
They'll download all the software you need to run on the different blockchains,
yeah.
And then they'll let your rig operate and create blocks and validate on the different chains.
Yeah, and what's fun here, let's just do it while we're talking here, because this will put it in perspective. With my Roth IRA that's mining, I have my NiceHash account right here on my phone. And I can look at it right now. It's mining currently, and it'll tell me the hash rates, the bit rates, and all that. And it's told me what I've earned if I look at the history here.
It's not a bad return.
Yeah, I'm doing okay.
Yeah.
And it'll tell me what I'm mining for right now. And if I hit history and stats, here's my profitability over the last 24 hours. And I'll look at my payment history. In the last 24 hours, I've made 3, 6, 9, 10, 1, 2, 3, 4, 5, 6 times 4. I've made about $24. Now, it's $24 on a rig that cost me about 10 grand. Now, some of you are like, well, that sucks. But think about that. That's 24 hours, $24 in 24 hours. So I'm going to take 24 And I could think, and you want to, people called yesterday, Matt, on one of my feeds and said, how much are you making in your rig? Does this even make sense? And you're going to call people that might help sell you a rig, and they'll give you some estimates. I'm just telling you mine. Don't plan on mine being what you're going to get. You may get 10 times that. You may get 10 less that. So this is no representation that you're going to make money mining. You could have a terrible service provider. You could have a terrible rig. But I'm just saying $24 times 30 days a month, I'm going to make about $720 a month. Well, if I take that and multiply it by 12, that's $8,640. Now, meanwhile, I'm going to take off about 5% for utilities and my service provider. So I'm going to multiply that by 0.95, and I've got a good deal. I know that. Some of you are going to pay more than that for electricity or a service provider, but I've kind of negotiated a good deal, whatever. So that's $8,200 a year, just a rough example. What was my investment? Divided by 10,000, I'm getting an 82% return. That's not too bad. So don't get hyper-focused on, I only made $1 in the last hour. It adds up, and you do it while you're sleeping. So as an individual, in summary, you can buy a rig, sign up with a service provider like NiceHash that's going to, there's a really bad word, they're going to act as your pimp and sell your sell your computing power, and they're going to package it up and then give you a payment every 4 hours. That's how NiceHash works. Now you may work with a different.
They're paying you in crypto, right? You're getting paid in crypto.
I'm getting paid in Bitcoin. Okay, and I can do that individually. Okay, so that's the example. It's very straightforward. You could do it on your freaking laptop. We have a client doing it on their Xbox because they can set it up with internet access with a video card, and they can do it. So I don't know what they're making. I don't know what provider they're using, but that's the concept. Okay. Now, Matt, why don't you explain how we take that and do it in an IRA basic level first?
Okay. So first thing with the IRA is, let's say you have an IRA at Fidelity, and you're like, hey, Fidelity, I want to buy and do crypto mining with my IRA. Fidelity's going to be like, you can't do that. And it's not that you can't do it. It's just that IRAs at Fidelity can't do it, right? So you need to get to a first step is to a custodian of self-directed IRAs that lets you invest in alternative assets. You can buy crypto, you could buy real estate, you could invest in a startup. You could buy crypto mining equipment or a rig, so to speak. And so first thing you're gonna need is get your retirement account funds to a self-directed custodian. A lot of people transfer over, let's say you're at Fidelity or Merrill Lynch or whatever. Or you could be like, I have no retirement account, but maybe I want to just throw $6,000 in a brand new Roth IRA, and I want to just do some mining with that. Cool. You just need a self-directed IRA custodian, and that's what our company, Mark and I co-founded, Directed IRA. It's a trust company. We're audited, licensed by the banking department. Go to directedira.com to learn about our different accounts.
And Matt, if I could add, folks, and then I want you to continue, is when you do that transfer from Fidelity to your new account here at Directed IRA, there's no tax. There's no penalty. Remember, you're not taking a distribution from your Roth to mine. You're going to change what your Roth is invested in. You're going to say, screw that. I'm not going to own Facebook stock. I'm going to let my Roth own an LLC that's going to mine. And then that's where the law firm comes in. We design the LLC. You open your account at Directed IRA. Within, I'd say, a 2 to 3 week process, your money is moved from Fidelity. You have a new LLC. Your IRA funds are at Directed IRA. They fund the LLC, and you're off to the races. Matt, thoughts?
Yeah.
Continue.
Yep. So that was step 2 there. The first step is you get an IRA at a self-directed custodian, like Directed IRA. Step 2 is we like using the LLC here because that IRA money is going to get invested into an LLC that the IRA owns 100%. So when you look at your IRA account, what does my IRA own? It doesn't own crypto directly. It doesn't own mining equipment for crypto. It owns an LLC. That LLC has a bank account. We're going to invest cash from your IRA into your LLC. Again, your IRA owns LLC. Then you're going to have this cash in this bank account, just a regular LLC business checking account for the LLC. You're the manager of the LLC. You can sign the check to go buy the mining equipment that the LLC will own.
I love it. Now we're going to go to step 3 here in a moment, but we have other podcasts on how to set up these IRA LLCs. What do I tell the bank? What does the articles of organization look like? We were on our podcast yesterday and someone got their bank account closed because they walked into the bank and said, I'm doing crypto. And they got crypto on their articles and they're like, I'm crypto. That doesn't help you at the bank because the banks freak out. So when you set up an LLC, Darren or one of our other attorneys will walk you through the setup of the LLC. That's all included. You're looking at about $1,500, $800 to $1,500, depending on the structure of the LLC, and all the legal work and the representation that we stand behind it are what you get. And you may say, well, I can do this on LegalZoom for $300. No, you can't. Because when you have an IRA involved, the custodians and trust companies won't take a LegalZoom document. They're not technical enough. So now you can pay for that personally. But go watch our videos, go listen to this, watch the summit, come attend the summit, listen to our other podcasts on how to set up the LLC. We're not going to focus on that now, but all those little steps, we've got answers for you. So you set up this LLC, money's sitting in it. Now we go to step 3. Now, Darren, let's throw you the baton here. So I have this LLC. Do I want to mine out of that LLC?
No, probably not.
Okay, now tell us why.
Now, I mean, technically you could, but from a tax perspective, you're going to be subject to UBIT. And so when we do have UBIT, the strategy there is that we're going to want to set up a C corporation, or what we oftentimes refer to as a blocker corporation. Okay? And so if you're up there at that 40% tax rate for UBIT, if we set up a C corp or a blocker corporation, we can bring that down to the 21% corporate rate.
I love it.
Okay.
Okay, so if you've noticed the nuance, now we're going to go to the whiteboard in a moment for those that want to catch this on YouTube. But if you're driving down the road, I'm going to repeat it. Step 1, you move your IRA. Step 2, you engage with the law firm, a law firm, whoever you want, we're here for you, to set up an LLC that's owned by your IRA. I'll say step 3, you fund the LLC. Now the LLC has got the money. What are we going to do? Now at that level, you could just go buy crypto and sit on it. That's fine. We have IRAs set up where you don't even need the LLC to do that unless you're going to pool money with family IRAs. But you get that going. But now that I'm going to mine, step 4 is I set up a subsidiary. And this is another entity owned by my LLC. And I'm just going to transfer over enough money to buy the equipment. So think of it like the restaurant. The first LLC is the building. Now I'm going to move the money to the subsidiary to run the restaurant or the mine.
Right.
And that's a C Corp, which can be owned by an LLC. Yep. We're okay.
Absolutely.
We cut our taxes in half. Matt, what would you add? So that's kind of a general view verbally.
Yeah. So the reason we do that is because once that C Corp, that's this top LLC here, makes money from mining, it's getting paid in crypto and Bitcoin, let's say. That's what this ordinary income we're talking about. But the C Corp picks it up and pays corporate tax on it, and it pushes down to a dividend. Under the tax code, and this is in section 512 of the tax code, this is where the exemptions to UBIT are. There's an exemption that says if your IRA gets dividend income, UBIT doesn't apply. Well, we know now that corporate tax rates are 21%. That's like almost a 15-20% swing that we can lower the tax on crypto mining. And so that's the beauty of the structure. You're not going to avoid it 100%. Some people think, oh, I can do a foreign blocker corporation. No, you can't. Nope. I know there's foreign blocker corporations out there that have 0% in the Cayman Islands. That works for hedge funds and for portfolio income, but is not going to apply to crypto type mining. So this is the best. I wish we had a magic wand that we could say 0.
Yes.
But 21%, that's as good as it gets.
Yeah, we don't want to be the bad guy here. We want to be someone that knows what they're doing, has an option that can cut my taxes in half. Well worth it. Now let's think back to these two structures. And we're going to go to the whiteboard here in a moment and just go over it one last time, because sometimes a picture says 1,000 words. But you've got that holding company at the bottom, that's your parent, where you put your initial Roth money, let's say. It's going to go up, buy the equipment, and do the mining in the blocker. Now let's say the blocker generates $10,000 of, let's keep it simple. Let's say in a given month, it produces $1,000 of mining revenue. Cool. You're after expenses, utilities, your service company provider, whatever you pay for, you're going to be able to depreciate your equipment. Some people call us that. Absolutely. We're going to probably not pay taxes for the first 5-6 months anyway, because we get to write off your rig. So we're going to, whatever the net income in that C Corp on that $1,000 is, We got to pay corporate tax. Now, do we leave the money there? No. Like Matt said, as soon as we earn that money, we drop it down into the holding company. And here's why. We pay tax on the $1,000 mining as a corporate tax. But let's say Bitcoin doubles in value the next day or whatever, or over the next 2 months or whatever it is, that $1,000 turns into $2,000. If I left that $1,000 that I've already paid corporate tax on, if I leave it in the corporation, the increase in value, I pay corporate tax on too. Well, that's stupid. I've got an exemption for that. UBIT doesn't apply to a hold. So whenever you earn money with the blocker, as soon as possible, you want to drop it down in the form of a dividend, like Matt said, and put it in your holding company. Now, as that grows in value, zero, no tax. That's the beauty of that. It sounds like you want to add something. What would you add to kind of clarify that?
The way I like to look at it with cryptocurrency personally or in a retirement account, there's kind of 3 steps, right? You've got your earn, you're going to grow it, and then you're going to sell it. And you look at those 3 stages and try to figure out, okay, what taxes are going to apply in this stage and what different structures do I want to use? So when you earn it, you want to have that blocker corporation to be able to bring down that UBIT. When it grows, in personally or in the retirement, usually it's not the problem. But then when you go to sell it, you have those capital gains. So that's where that Roth account is going to come in, right? If it's in the retirement account and it's in a Roth account, you sell it, you get the gains tax-free. If it's personal, we've got other strategies for that, right?
Like so Matt, the secret sauce. Tell us why the Roth just came into the play.
Yeah, and Darren throws out the Roth because, I mean, we love Roth IRAs here. Tax-free on the way out. Everyone wants the $5 billion Roth IRA like Peter Thiel. And, that's what self-directing is all about, is investing in what you know. And if you're into crypto and that's what you know, and you can do this on the mining and you dial it in for your situation, we want to grow that long-term wealth. This crypto you're earning, we're going to pay some UBIT as we make it. We drop it down to hold into the holding company, so to speak, IRA LLC, and just let it appreciate, And let's say you do this for 10, 20 years. All that appreciation value, you can sell it and convert it to fiat if you want, to cash, and distribute it at retirement, zero tax. You could leave it as crypto and just sell little pieces of it as you want to pay for stuff in retirement. But you've built this nest egg or war chest or whatever you want to call it, as the case might be. And but you've done it in a tax-free way. You had to pay a little corporate tax as you're earning that, but all that long-term appreciation of that crypto you've earned over those years, you can do tax-free.
Okay, now let's address a few nuances that we cover usually in our open forum. If you've stumbled upon this on YouTube or on podcasts and you're like, hey, these guys kind of know what they're talking about, they're not too boring. We do this podcast every week, and every 3 weeks we do an open forum where people call up and ask questions about this and other things inside your Roth IRA or 401k or whatever you want. So a question you'll see, and you're going to be ahead of the curve right now, is someone will say, okay, I get it. I've got corporate tax of 21%. I cut the bill in half. Well, I live in California, or I live in Illinois, or I live in New York, or I live somewhere where there's a state or even a borough tax, like a city tax in the New York City boroughs. So you may say, okay, I'm cool with the corporate tax of 21, but I don't want to pay state tax. Well, if you're mining individually, there's no way around it because you're going to pay state tax wherever your residency is. Setting up your rig or your mine offshore or in another state isn't going to help you at all. But with your retirement account, and specifically with a C Corp, that C Corp could be set up in a state where you don't live. Inside of Roth, this is the one time where I might be a little excited to have a C Corp in a different state because I can get away with no corporate tax at the state level with the mining. And when that dividend kicks out, it goes down to my holding company, and that holding company is never going to pay tax anyway. So I don't care where I set that up either. Now, California and some states say if you're the manager of an LLC, we're going to drag you into our state and charge you $800, and you can get out of the gross receipts tax there's different ways to get around the state planning. That's a whole other topic. But just be careful with someone promising you that you can set this up offshore or in another state and just avoid all taxes altogether. That's a lie. You got to understand what the strategy is. Matt, thoughts?
Yeah. Yeah. So we might use Wyoming, let's say, probably be where we would go. I don't know. Do you have another state you'd like? I mean, lower fees. You can do Nevada, no corporate tax too, but Nevada's got fees. They're just like trying to compete with California on who can charge the highest fees to have a business entity. So, and that's not a competition you want to be, engaging in, unless you live there, maybe. But so you could find a state that has no corporate tax, but yeah, I think that's a really important point because it is different than individually. Individually, you don't get to play that game, and I think that's a really important distinction because some of you that may mine crypto have talked to individually, many of you do, that would do it with an IRA. If you're planning on this, don't play that game. Those of you in California to think, I just set up a Nevada LLC that does my crypto mining. The state of California doesn't care. If you reside there, you're paying income tax there on the personal side.
All right. Now, before we go to the slides and just do a visual summary of what we've talked about today, is there another commonly asked question, Darren, that you'd like to field? Anything that
I have one, I think others. Okay. Unless Darren, you have I have one more if you want to go there, Darren. Okay. I'm going to take the easy one, so I'll steal it from you. Okay. There's one other rule that applies. There's this UBIT tax you got to be aware of when crypto mining, but there's also a rule called the prohibited transaction rule. And what that rule is you can't basically be personally managing the rig or the mining equipment that your IRA owns or your blocker corp or the holding entity.
Can we say servicing?
Servicing, yeah, sure, same thing.
Well,
so
you can be the manager of the LLC. So I want to.
That's true, and you can oversee things and buy it and check on things and But here's a couple things you can't do. You can't have it at your house, on your utility personally, running up the electric bill. Okay, that's going to cause a prohibited transaction issue. You can't be the one fixing it all the time and putting it together and all that type of maintenance or servicing would cause a prohibited transaction. So for the stuff that your IRA is going to mine, you would need some third party involved or some place where you can be using electricity that's separate from you personally.
Good. Great comment. Anything comes to mind for you that'd be a common Q&A? Here's one. Remember, your C Corp is going to have to do a tax return at the end of the year for the mining, but your holding company LLC does not. Now, that's assuming that your IRA owns 100% of that LLC. But I have clients call up and go, hey, I got my IRA, I got my spouse's IRA, I've got my 3 kids' IRA. We're going to pool all this money into one LLC so we could go buy a $20,000, $30,000 rig or more with multiple cards. We really want to, because truly, the more cards you have in a rig, the more efficiency you can get and the higher rate of return on the rig because you have fixed costs with the motherboard and the CPU and other things, and you want to try to expand the rig to save money on the fixed costs, if you will. And the service provider may charge the same whether you have 4 cards or 1 card. So anyway, you might pool money in a holding company or the mothership, and that would require a tax return. So be thinking about tax returns at the end of the year. Make sure that you're tracking your revenue. You're going to have to keep in mind to do some accounting, because if you plop this all on your accountant at the end of the year, and let's get real here, not a lot of accountants get this. Their brain's going to explode, and then you're going to be pissed. You're going to be like, ugh. So early on, figure out what your accountant's going to want to see at the end of the year and your transfer procedure from the C Corp down to the holding company. How many players do you have? Because the better accounting you do, think about it. You're going to be a better manager of your rig. You're going to make more money. You'll make better decisions. And when it's tax time, you'll have a cheaper bookkeeping and tax bill.
I think the biggest comment that I get from people who come to our firm and actually start talking to us is that it's just so refreshing to find somebody who actually understands cryptocurrency, because a lot of them have already gone out to a bunch of different CPAs and have tried to find somebody who can help them with the issue, but they just don't understand it from a technical standpoint, or they don't understand it from the tax standpoint. And so trying to find that person who can really help you out. And I mean, I don't want to toot my own horn at all.
Go ahead.
But I'm going to do it anyway.
Yeah. Here comes the train.
Like Mark mentioned, though, I do have an engineering background. I've written patents for IBM. I understand the stuff. And so being able to actually walk through the process, like you have to do the administrative stuff on the back end too. Like, how do I transfer it from this wallet over to this wallet? And how do I work with KYC and all these other things? So,
common question. And then we'll go to the whiteboard and wrap it up. But wallets. We got to talk about wallets.
Yeah.
Because your mothership.
You're gonna need like not one big George Costanza wallet, okay? All right, you're gonna need 2 separate wallets.
Yes. And so I'll show that in the diagram. But remember, the minute you set up that LLC, you're going to open a bank account because the Roth money has to get to a bank before it can get to the wallet. And then you're going to probably go to a Coinbase or a Gemini or whoever you can to get an entity wallet. It's a very big distinction. And it can be kind of a pain. All these hedge funds are trying to open wallets in their entities, and we're little small fish at the bottom of the pile trying to get through Coinbase per se. Now, we love them. We want them to service us, and we need a wallet, so I'm not trying to diss on them. But if you know someone at Coinbase, call me. Okay, but anyway, then you need a wallet for your mining.
There's lots of other providers that, by the way, I think are a bit better at those wallets for LLCs, like Bittrex, and there's some others that we've had clients use. Even the Binance, I think it's Trust Wallet. We see that one quite a bit. But yeah, some of the larger players like Coinbase and Gemini and Kraken's actually moved a little bit faster. I'll say this lately, but they're just, you got a $50,000 account. They're like, we got a 50 million relationship that's been waiting 3 months. Like, we'll get to you later.
Yeah. So you're going to set up a wallet for your holding company and a wallet for the C Corp, because as you mine, where's that going to go? It's got to go to the C Corp first in that wallet. Then it's going to go into the bank account for the LLC, for the corporation, and down to the LLC. Or you could do a wallet-to-wallet transfer. That's what I do. Now, whether you go through the bank account of your mining entity down to the holding company, or you go from a wallet to wallet, it's okay. 2 bank accounts is equivalent to 2 wallets, but they have to be distinct and separate. And you got to be tracking the accounting of it. Okay, we ready for the whiteboard?
Yeah.
Okay.
Let's do it.
All right. Now, regrettably, we had to cut Darren out. He's still here, but the whiteboard took Darren's place, just so that all of you on YouTube can watch this a little more clearly. Now, here down at the bottom, we have our Roth IRA. I may show you how this fits in your overall trifecta of your personal plan in a moment. I think that'll be maybe a fun little climax for the show, but let's just go through what we've already talked about from a visual representation. And then I'll just run through it quick, Matt, and then you add any other items that you'd like here. So I have my self-directed Roth IRA over here at directedira.com. Again, when possible, we want you to use Roth IRAs, pool Roth IRAs, or do chunking and convert traditional to Roth. Use your Roth 401k, any of those. Whenever you're playing with this in a Roth format, we feel it's going to be a win.
We presume you're into crypto because you think it can have exponential return rather than the crappy mutual fund you've been invested in before. Now, if you believe that, the Roth is where you want to be because that's going to grow and come out totally tax-free, as opposed to your traditional account, which if, Roth goes 10x, crypto goes 10x of what it is now, you're going to be paying tax on the way out in a traditional account. So that's why we're emphasizing the Roth.
Mm-hmm. And
Roth
if some of you financial advisors or researchers out there, you may go, well, the debate between traditional and Roth, we did a podcast about 3-4 podcasts ago on this topic and broke it down. Go watch or listen to that. So I take my Roth IRA, I fund my holding company, which is this little bubble here. It'll be in a state where you live, or if it's an expensive state where you live, we could set it up somewhere else. Maybe even where your rig is located. But we have options here because you're not personally going to be taxed on this. So we want to keep state fees down to a minimum. Now, again, that would be a different conversation if this was you here and not your Roth. All right. So we have our holding company. Immediately, we're going to set up a wallet. We're going to set up the subsidiary entity with the necessary funds to buy my crypto mine up here. We're going to make a C election so it's taxed as a C Corp, and it'll have its own wallet. It will do an 1120S tax return.
Just an 1120.
1120. Woo! Sorry, 1120 tax return. We're used to the 1120S world. 1120 corporate return. Pay 20% on the profits. And as Matt said, we want to quickly transfer profits or dividends down here so that we're not paying corporate tax on any appreciation. Matt, any thoughts?
Yeah, that's exactly the steps. So just remember, sometimes I think people can get a little, I don't want to say lazy, but you might let some crypto accumulate in there and it's been a month or so before you move it from the C Corp or Blocker Corp wallet down to your holding company wallet. And so you might have a little appreciation there, but yeah, just try to be active in getting it down to the holding company so that all that appreciation over time will come out tax-free.
Okay. Now, a little more detailed slide here as we go to the next level. I've got a good hour and a half or more video on my website at markjkohler.com in my tax and legal library, amongst 50 other videos, where I go through this in great length, step by step. So if you want to go to my website, you could buy that video. Also, if you're coming to the summit in Phoenix this year, we will be going through this in detail at that summit. There'll be a breakout session just for this topic. Okay, but let's go through the steps quickly here because we don't want to hold you captive or leave you hanging, but we're going to go through it quickly. Step one, you create your account and you fund it with Roth money from a transfer or a new contribution. Or you have an LLC that's got multiple retirement accounts in it. So NewCo, step one, is going to be based on how many retirement accounts that you want to use to fund this. That's step one, get the accounts ready. Step two, I'm going to create this LLC. It's going to hold all the future crypto after mining. Step three, I want to immediately apply for a wallet. We don't know if it's going to take 2 weeks, 2 months, or 6 months. So we want to quickly get that wallet going. Step four, we put our money in the LLC. I can't put money in an LLC until I've created the LLC and got a bank account. Matt, timeline for this, realistically, what would you say?
I'd say about 3 weeks. You do have a lot to do. You've got to set up an account, roll over funds, get LLC 1 going, get LLC 2 going with the S Corp election, get a bank account opened up in both, and the wallet. And I'll say that the wallet on the holding company is probably the longest one that's going to take. We've had some clients wait months. Sometimes I see clients turn around in a week. It's just kind of hit and miss, and I think it's kind of their expertise or relationships that they might have, but or some of the providers they choose. So, but that's fine. You might get in a situation where you're like, I'm still waiting for my wallet, my institutional or entity corporate wallet for the holding company, but I'm already mining up here. I'm going. That's okay. That wallet might come a little later, and you might have a little appreciation for some crypto you've made for a couple months, and then you get the wallet at the IRLC holding company later and move the crypto down.
Yep. Okay. After we get our wallet applied for, we move to and we've already funded the company. Step 5 is we got to get our subsidiary going. So the same lawyer that sets up this LLC will simultaneously be setting up the subsidiary, making a C election in the process. Step 6, we're going to transfer the money to this bank account. I don't need to worry about the wallet yet per se. I need to get the money up there, and I'm going to go buy the equipment. Now, the timeline I'm seeing for clients is they want to go buy this equipment right away in their own name. This is a caution. You cannot go buy this equipment in your own name and then transfer it to the C Corp later. The IRS would love to torpedo this structure. So you've got to make sure you're very, very careful on setting up the CPU in the purchase coming through the C Corp. Step 8, you set up your third-party account to manage your mining. We use NiceHash as an example. Some of you hate them, some of you love them, whatever. Step 9, I start mining. Step 10, I keep good bookkeeping and records. Step 11, I report income on my 1120 tax return. Step 12, I'm transferring profit daily, down or weekly or monthly into my holding company. And step 13, I'm now building this company with other coins that I may want to choose to do. 13 steps, and you could argue there's more steps or fewer if you break or combine these down, but this is it. So, Matt, any final words?
Yeah, and so I think you can see is like, trust us, we like simplicity. But when you're talking about retirement accounts, crypto, mining, UBIT tax, this little weird area of the tax code, it takes some gymnastics to figure it out and get the most optimal strategy and structure to mine crypto with an IRA. And like I said at the front end of this, we wish we were wrong on this. I wish you didn't have to deal with UBIT, 37% federal and possible state pickup, depending on the state you're in. But the reality is it's there. Yeah. We have some strategies on how to minimize it, almost cut it in half that we outlined here. Also, you got to make sure you're not violating the prohibited transaction rules and mining it at your house and all that stuff with your own electricity and doing all the physical work on the rig. So just try to follow these rules. As tax lawyers, we love good tax strategy, being as tax efficient as possible. But we also know the limits of the law and what the reality is. And that's what we're trying to do here, is just set the reality of where you can go, what the law is, and then try to give you the strategy to go and execute it and do what you want to do. Invest in the stuff you want to do, whether that's crypto buying and selling or crypto mining, and use your retirement account to do it.
Well, great final words, Matt. And I want to thank Darren for being here again off screen. But Darren Charrington, if any of you want to call the law firm, the link to the law firm is down below. He's also a good one to start with. You could pay him for an hour and just say, Darren, tell me if I'm headed in the right direction. Based on my situation, how much money you have, what your goals are and plans. We want to look at your big picture, married, single, where you live. All that needs to be considered. So you can get an appointment with Darren if you want to do that.
Yeah, and just, we're a law firm. I just keep in mind, you can't just call up and get Darren right on the phone when you call in. You schedule an appointment, and stuff. But of course, we're working this area. And we have a lot of educational resources too on this. Mark's mentioned some of the stuff on his website at Mark J. Kohler. If you go to directedira.com/cryptocurrency, even if you just Google the word crypto IRA, we're the number one provider that comes up on that. We've got a lot of educational resources on how to just buy and sell crypto with an IRA, which is much, much, much simpler than this. Doesn't need LLCs or anything like that. And different just topics on other ways you can use your retirement account to invest in other alternative assets, so you don't feel like you're just stuck doing boring stocks, bonds, and mutual funds. And
I want to give any of you out there final note as a little timing strategy. I know some of you are going to be frustrated if you call and Darren's out 3 weeks, for an appointment, as we're busy. What you could do is at least get started shopping for your equipment, get your relationship with your service provider ready to go. Decide on what wallets you're going to set up. Get a lot of your homework done. Get working on setting up the Roth accounts or the retirement accounts at Directed IRA. And if you're going to miss out on an equipment deal, see if you can have your friend buy the equipment. And once you fund the C Corp, your C Corp can buy it from your friend. But do not put it on your credit card. Do not put it on your moms or your spouses or your kids. Those are going to be prohibited parties. And I'll say this most importantly, if you're going to do this, freaking start watching and listening to our podcasts. You got to get to the summit. Peter Thiel didn't build $1 billion Roth by just letting someone else do it for him. He was very, very involved. He knows what he's doing. And if you're going to build millions of dollars, you've got to buck up and learn the strategies. This is your ship. Be the freaking captain. We're there for you. We love you. We hope you come back. And Matt, final word?
Yeah. Just get more information on self-directing at directedira.com/podcast. If you want to learn the basics on everything else we've talked about, from the LLC, just setting up an account, transferring and rolling over. We've got all the content there. We do this show weekly. You can find out on all the different podcast channels. Also on YouTube, if you love the visual and you want to see how good looking Mark Kohler is. Just get to YouTube if you're hearing us on the audio side. And thanks for hanging in with us here. We appreciate it.
See you next week, everyone.